Hey everyone, welcome back. In today's video, we will continue to speak about Bitcoin accumulation strategies. One specific approach that I'd like to present today is something I call improved dollar cost averaging. So there are multiple aspects of what makes it an improved dollar cost averaging, and I'll cover them in today's video. This is the chart we will arrive to. That's something I created for you to explain the approach. So regular purchase, that's the first step. It works well for Bitcoin because of two reasons. One, because the price of this asset is very volatile, so it goes up and down very often. But the second reason is that over time, Bitcoin price does increase. So if we spread out our purchases on a regular basis, such as a daily or a weekly or a monthly, we end up in profit. So let's say on a 1 week time interval, the price could be going down, or 1 month or 6 months. But again, if you zoom out, and the price will recover and increase. So as the time goes on and we make the purchases, let's say each Sunday at 12 o'clock here and here and here, we will improve our overall average cost we spend, right? So instead of going on week 1 and spending all our money here and this being our cost, or week 2 having this our cost, we bring down the average cost we spend to own Bitcoin. So what do I mean by an improved dollar cost averaging? Well, there are two things that I want to introduce to you, in case you are not familiar with them, in how we can improve the price at which we own Bitcoin. And first one is the safety orders. So we introduced the safety orders for each of our initial purchases. It can be different amounts, can be the same amounts, let's say $10, $10, $10, $10. The spacing between them is also arbitrary. For example, we could set spacing to 5%. And this would be still the schedule, right? So instead of them just the initial purchases here at the given point of time, we also create this limit orders to buy Bitcoin at a lower price, right? And when we put together the price chart, we see that now as we place the safety, the initial orders at the time and price that happens to be, our safety orders are placed below that at the given spacing, right? So week 1, for example, we make the purchase here and we place the safety orders. They are not consumed, they're just set there for the time when the price drops. So if we walk through the timeline, week 1, week 2, we will see how that will actually happen. Week 1, just the initial order is placed, or actually taken. Then week 2, again, we spend our initial budget and safety orders are placed. Now look what happens on the week 3 and 4. So at the week 3, our initial order or initial budget is spent, but because the price dropped, we end up also triggering the order we placed for the week 2. That's the safety order we had here in case the price drops. And this already averages out the cost that we had for this particular week. Again, the price continues to go down, more safety orders are filled, this one, and this one, and again, our average cost improves. So as we go through the weeks, and if this happens to be a downtrend, like I'm showing here in this example, a lot of safety orders are being triggered. So at the end, somewhere on week X, let's say if we are at this particular price level, all of these safety orders, a size of these ones maybe, that are triggered, consumed, and we have purchased Bitcoin. So this is one aspect of the improved dollar cost averaging. So instead of just having the regular purchase here, at this first level, we also have the safety orders ready to be employed when the price goes down. Of course, that means also you set aside the capital is waiting to be used. And with this, we end up lowering significantly the total cost of our Bitcoin. So we end up more in profit later. And the second part of the strategy of improving our ownership of Bitcoin is actually selling a part of it when the price recovers. So now it's getting a bit more abstract. I tried to show this visually. And the idea is that, let's say, if the price goes up, or when the price goes up, and it does, what we would do is we would sell a bit of our Bitcoin, quote unquote, the ones that we bought at the high price, and keep only the Bitcoin that we purchased at a lower price. Thus, our profit margin increases. Again, if we just use initial orders and safety orders, our cost average would be somewhere here. And then if we even sell a bit on top, then we bring down our cost average even more. Please do leave me a comment below if you found this video useful, if you have any questions, any other thoughts, observations, and also if you want me to show you some of the backtesting with actual data using this approach and historical price of Bitcoin from past years.